Good morning, everyone. Welcome to the Modern Market, where every day we discuss all things to do with the modern market. That is the crypto market, the NFT market, and how to make some or ideally a lot of money on the internet. Loaded up for discussion today. We have market grinding higher in advance. Oh, no, that's not the headline today. The main headline today is a different one. It is that the market has gone higher after the FOMC meeting, even though the cuts have taken place. They were expected. Also, we've got China banning companies from buying Nvidia chips. So that's pretty relevant to the geopolitical situation, which we will discuss. And we've got the SEC approving listing standards for ETFs, permitting a clear path for crypto ETFs to list and trade. We also got some really interesting price action to talk about, as well as chiming in on where we think attention to capital is flowing as usual. So stay tuned for that. I've got Legendary in the co-host seat with me today. We are ready to get into it, but just a reminder, friends, before we do, nothing that we say here is financial advice. This market is incredibly risky. We do not know anything for sure, so please proceed with caution and exercise your own judgment. With that out of the way, Legendary, it's Thursday. It's the 18th of September. How are you doing? How are you feeling?
GM, I'm feeling thirsty again.
Why?
It's weird. Last two shows, I drink so much. I feel like I'm the only person drinking on the show, by the way. Like, you drink in such a subtle way that basically nobody notices. For those
you don't notice specifically. I'm drinking all the time. You just okay. Are not concentrating.
You do it very English, very sophisticated, very subtle, almost like hidden. And I'm like, I have this massive bottle, or I have like 3 different glasses and 3 different drinks for a show, and I just go through them.
That is true.
But I don't know. Maybe that's a bullish sign. Like I'm thirsty for gains, but I stay hydrated.
It is true that you are an unsophisticated drinker. That is true. I can give you that. How are you feeling though? Aside putting the normal thirstiness aside, how are you feeling on the thirstiness for gains side? Like in the end, after all the conversation we had yesterday about FOMC. Nothing really happened, right? Do you think it was just because it was so telegraphed and pre-planned? I mean, we're probably going to talk about this more today, but any quick thoughts before we hit the main headlines and price action and get everyone up to speed today?
Beautiful meeting yesterday, especially with the market now thinking there's going to be 2 more cuts. We were like between, 1 more, maybe 2 more. We had a bit of a scare in the S&P 500, and then everything resumed to being up only. And I feel like the appetite is coming back for more degenerate plays down the risk curve. I don't know if you've been tracking mindshare lately, specifically AI. It's back at 37% mindshare. It was as high as 70% in January when we were like really in AI season, but it's been grinding higher and accelerating. So to me, this is like the indicator that the market wants more risk, and I like that.
Interesting. I have not been tracking the mindshare necessarily, but I have noticed there are things that are moving more. Like we've had 2 in the last 24 hours. There's like a base coin called, what is it? It's in the snapshot today, like synth. Is it synthetics or something? Syn something. That like doubled up really quickly. We had the Asta token, which is CZ's Binance, CZ's like hyperliquid competitor that they are trying to move. So we've got those 2 things to talk about. There's definitely like just appetite and people coming out with things and things moving in a hot way. So we'll discuss all of that and more as usual today to get up to speed with what we think is important and any opportunities we see attached to those pieces of news. So let's get into it though, to get you up to speed with everything from the last 24 hours. We've got Bitcoin starting with the price action. Of course, in the majors, we've got Bitcoin up 1% to 117,000. We've got ETH up a couple of percent to 4.6K. XRP is up 3% to $3.10. BNB up another 4% to $997, up 11% on the week, outperforming all other majors. Gets very little love or attention on the timeline in general. It did go past $1,000. So just something to note. Very, very under-owned by at least Western CT.
Oh, yeah, 10,000x from the ICO price. If you think back, this was at 10 cents initially.
Interesting. Do you think that's why hyperliquid, like people, the target on BNB's back is Hyperliquid, right? Or is that the other way around? The target that Hyperliquid is putting out there is BNB in some way, right? So do you think that's why, if BNB keeps moving higher, can you always expect? That's something I want to track, actually. Is the days when BNB moves significantly higher a day where Hyperliquid moves in the same way? And today was actually one of those days where Hype is also up 5% to 58, also to an all-time high. I think it went to 59 as well. Do you think there's any relevance to that? We'd have to check.
We'd have to check. I probably think that there is something speaking to that theory, but we would have to check, overlay those charts, and filter out like specific news events, like Hyperliquid announcing HIP3 will obviously move Hyperliquid in absence of whatever BNB does on the day, but it would be interesting to look into that.
Yeah, and to be fair, over the last 7 days, BNB is up 11%, outperforming all things, including Hyperliquid, which is only up 5. So, but other bit welcome shout out to Solana, up 5%, also up 10% on the week, right up to $246. So, very, very green the day after FOMC. We'll digest that in a little bit more detail as we get into the headlines. Talking about price action on the meme side of things, we've got Doge up 5%, which is always helpful. Pushed up to 28 cents again, up 12% on the week. That's one of the quiet winners, I feel. We touched on that yesterday, which is obviously helpful to the rest of the market. Got Pump, which is flat at 8 bill FTV, but Pengu's up 13%, Bonk is up 6%, SPX is up 11%, Fartcoin is up 10%, back to 90 cents. WIF is up a few percent as well. Rect is actually down 4%, going in the wrong direction today. Mog is up 6%. Toshi, which is up 50% yesterday, is down 7% today, so cooling off a little bit. Probably winning on the day when there's that hype around the base, but the potential base airdrop coming. Toshi being one of the main tokens on base. So broadly speaking, another green day on the meme side because everything else is green too. Getting into the headlines themselves, though. Let's get you up to speed with that and the rest of the roundup. Some other interesting bits of news too. We have markets broadly grinding higher after the FOMC 25 basis points cut yesterday, with another projected 50 basis point cuts for the rest of 2025. China bans companies from buying Nvidia chips. We're going to talk about that, and finally SEC approving listing standards for ETFs. Which I think is also quite meaningful as well. So we'll explain the significance of that. Some notable price action. Asta is the platform I was speaking about, the CZ supported Hyperliquid competitor, up 250% to 4.4 bill FDV. When I last checked, it might even be higher at the moment. A lot of friction there to get hold of that token. You can only buy it on that specific platform. You need to deposit. And apparently you couldn't even take your money out. Yeah, I'm not exactly sure what was happening on the withdrawal side, but a perfect recipe to really send a token higher when there's a lot of friction to get involved and you can't withdraw. That always helps to keep a token price high when you're not allowed to get your money out of the platform. BNB, as I said, is up 4% to $996. SIN is up 71% to $2.4 billion on base. That was the one I was mentioning earlier. Hype's up 7% to $58, and Eigenlayer is actually up 30% on ETH to $3.4 billion. Lech, anything we need to know on the NFT side before we hit the rest of the roundup?
Yeah, let's take a real quick look. Big mover of the day are the Moonbirds, up 15% on the day, 2.85 ETH floor. The rest doesn't look too bad today. Almost everything is in the green. Pudgy's up 2%, 10.4 ETH. Apes up 2%, 9.3 ETH floor. Milady's up 4.5%, 1.96. Azuki's flat on the day, 1.55 ETH floor. So a bit of a greener day for the major NFT collections.
Good stuff. I'd like to hear that. Moonbird's doing well. In the Web3 roundup, we've got Project X on Hyperliquid announcing phase 2. This was pretty interesting. Good friend Lambo stating that now any coin from any chain can trade directly on Project X with zero aggregator fees. I think people found this particularly impressive because of the no fee aspect. And I think people playing around with the UX people were pretty impressed. I have not played around with it yet, although, as people know, I've been LPing on Project X for quite a long time. Very, very excited to play around with this cross-chain functionality now. Forward Industries announces $4 billion equity offering with proceeds to build Sol Treasury. South Korea's first one-peg stablecoin, KRW1, launches on Avalanche. I have been reading a lot about South Korea's kind of conversation to have their own stablecoin. I think now is probably the time we're going to see more countries start pushing their own. Obviously, USD dominance is probably going to exist, but I think there will be more coming in the next few months and next year. MoneyGram, serving 50 million people in 200 countries, has adopted stablecoins for remittances. Definitely a IRL business, which is ripe for disruption given the costs involved. Kalshi announces partnership with Solana and Base to boost on-chain innovation. That's in the prediction market world. Jack Butcher's Gas Wars on Art Blocks sells out instantly, with more teas for those who had failed transactions. This was an auction mechanic. No, it wasn't an auction. You had to load up the gas and try to win these specific editions of NFTs. I wanted to participate, but I couldn't. I wasn't available. I think it mostly got botted, and I think they're trading for around 0.4 ETH now. But in typical Jack Butcher style, he's kind of teased that if you tried to participate and didn't win anything and probably lost a bit of money in gas, something could be coming for you. So do not despair too much if you lost some money there. TokenWorks announces expansion of Punk's strategy to other NFT collections. This was the method where they're kind of creating a coin, using some of the funds to buy CryptoPunks. I think they bought 9 CryptoPunks now, but they're going to expand that strategy and method to Pudgy Penguins, Bored Apes, Moonbirds, Dickbutts, and Meebits. So that is pretty interesting. And then finally, Bio Protocol raises $6.9 million in seed funding led by Arthur Hayes' Maelstrom Fund. Obviously, in a very, very different direction. We saw this kind of this industry, not industry, but this subset of the industry pop up in the mania at the back end of last year, decentralized science. But this, some of it was maybe a little bit nonsensical. This one seems to have attracted some prominent funding. So let's see. That is the roundup for today. Ledge, before we hit the main headlines, we've got that bigger discussion and reflections on FOMC, what that means for our portfolio, how we're thinking about things. But before we get there, anything catching your attention from around the news?
Yeah, 2 things I want to comment on. First of which, do use Project X today for a cross-chain swap. I think there was a...
You used it?
No, you should do it.
I should.
Everyone should do it, but you should do it. Because
Why?
I think Bobby, who's one of the founders, posted in a reply that you should do one cross-chain swap within the 24 hours and teased that will have some sort of implication, which I don't know, but there's still time to do that.
You like a little subtle implication.
And I did use it, and it's pretty good. And
okay.
I've been thinking about this. Like, we have so many DEXs and bridges and DEX aggregators and bridging aggregators, but it feels like Project X really picked up a lot of traction. And I think they managed to... I was asking myself why are they so successful, right? And why are they growing so fast? Because I don't think that it's easy when, people like myself, for example, I'm happy to try 3 bridges, use the best one, and I don't really have like swapping or bridging loyalty necessarily. And sometimes I'm just too lazy to like go to a website and I eat higher fees when it's a smaller swap and I swap directly in my Rabby wallet. But it feels like they managed to build like sort of some loyalty and branding around that. And I wonder if this is like one of the success factors, and how much the product's good. Don't get me wrong, product's good. But I just, did this little case study in my head. How much of that is driven by them like managing to build a good brand because this is what they're good at, and how much is driven by people thinking back to the Pac Moon times, being like, oh, this could be a nice airdrop as well if they execute like they did before. But I don't think that the airdrop hunt would be enough. So I do think that there is a certain amount of their success which goes back to just building a good community and building a good brand with or around Project X.
I think it's a great question. I think it's a little bit of everything that you just said. I think people know them from before and they like them from before and think they're capable of creating hype and anticipation and value. So I believe that is true. And so therefore a proportion of people will be piling in for the points and for the monetary potential gain. And I don't think they shy away from that. So I think that there is a trust there that people will be rewarded in some way, in the same way that Web3 people are incentivized. So like incentives are aligned from that perspective. But I think you're right, man. Like I think that there is something beyond that. Traffy in the YouTube comments just saying Project X is pure marketing. To be honest, I'm not sure what we mean by pure marketing necessarily, but I do think that they've managed to create a cult like community, partly incentivized because of aligned incentives and the financial opportunity, partly because honestly, I mean, we know Lambo well. We've been around with him for quite a while, would consider him a friend in the industry. I think they've just like been good actors and like well-intentioned people for a long time, and people kind of want them to win. And if you think about it, if you compare them with other dexes, if you think like, what is it about a specific product that creates loyalty? I don't think other people necessarily treat you well in the industry. So, you know, have Uniswap been particularly treating their customers well necessarily? They've always had this fee. They've always been more expensive than other people. I think they've got a very trustworthy brand, which is good. But if you've got someone that's going to come in with people like, people trust, people think that they're well intentioned, and then they're going to undercut everyone. It's kind of what Brett was saying on the show yesterday. Your margin is my opportunity. Everyone's margin is everyone's opportunity. With in the smart contract world where you can code something and then just let it run, and there aren't, you know, of course there are costs involved in running the business, but someone can probably code it for a smaller fee. And I think there's a lot of loyalty that gets built up in that process, and people are like really ready for this new product where they want to, you know, to be clear, it's not a new product. Lots of people can do cross-chain swaps. There's so many people where you can do that. But I think getting behind some people who people like is, people are kind of ready for that, in my opinion. But I don't know. Obviously, a little bit biased. We know Lambo. We're friends with Lambo, and I think they're doing a great job too. But curious for your thoughts there.
Yeah, I agree with that. I definitely think that after Sushi and Uniswap did the first airdrop, this airdrop advantage was basically eaten. That was gone. And if you then enters a new competitor with a product that is exchangeable, is interchangeable at the end of the day, a lot of reputation and trust. Reputation, trust go a long way. Probably that's a fair point. The other thing I wanted to pick up from the roundup is bioprotocol, is the decentralized science aspect, because that's actually, it's a subsector that I really like. So, you know, I come from a family that has a background in medical research and scientific research, and I know how often when you are in that field, you depend on grants, you depend on getting funding for the next research or for the next study that you want to do. And it's not easy to basically do the research on the things that you necessarily find interesting all the time. And having this decentralized venue, in theory, is a very nice alternative to fund things. However, this is like, you know, my utopian view on it. The realist in me says the misalignment between the time horizons in crypto and decentralized science couldn't be any bigger. Like, remember we had that urolithin A experiment with mice, and
Yes.
when they were like, do they get the supplement versus like another group of mice who don't do that, and does that extend their lifespan? Then you have like these animal tests, and you would progress with them, and at some point, you know, if that goes well, you would do human trials, etc., etc. And at one
And
point,
this was designed by the bio team, right? Like it was something to do with the token.
yeah, exactly. You would bet on the token, on the outcome, basically, of that experiment. And now you have the same with Buy. You have like this DeSci launchpad, and you can bet on specific tokens there. But the thing realistically is that it takes years in research to get to a point where you're like, okay, this is a new thing. We found that this will be admittable for human beings to take, and this is the effect that we have. And in crypto is like, oh, okay, I bought this DeSci token and it's not up 1,000x tomorrow. It didn't make us immortal. It didn't extend our lifespan by 50 years. I don't care about it anymore. I forgot about that already. So
Yeah.
I want this to work. Like, I want DeSci to become a meaningful funding alternative for researchers. But I am skeptical when it comes to these different time horizons and attention spans that where crypto sits on the one extreme and has a 1 hour attention span in the best case, and research goes in things in multi-year terms to get something done.
I think it's a good point. It's a very good point. It's something which I have deep skepticism over. However, there are some smart people in this round. So it's led by Maelstrom's fund. That's the fund by Arthur Hayes. There's also some other smart people in the round as well. And I always pay attention to like who's in the round. And there's certain names that I like to pick out that I think, okay, well, if they're in, there could be something that makes more sense here, purely more than just a purely speculative financial play. There's got to be something that is grounding this in some way. I'm very skeptical about this as well. I was not a fan of it when it first came out. I thought it was very superficial, the way that people, I can't remember what the experiments people were running. It was like, what was going to happen to these mice, or what chemicals they'd get fed, or like, I'm kind of butchering it. I can't remember exactly what it was, but it was something ludicrous in my opinion. But I'd be curious to get the founder on. One thing that we're going to be doing in the show for the people who are less familiar is very, very soon, you might have noticed like a partial, well, we've kind of rebranded and the show looks different when you're looking at it now on YouTube or on X, but it's going to change like again, just not hugely, but it's going to have a completely different setup. It's going to look way more pro, and we're going to start ramping up the guests. And so when I'm thinking of guests, someone like this, where I have like legit questions, and I'm sure you do too, to like figure out what is going on here. Why did all these people invest in you? What are they seeing that maybe an initial skeptic might not be able to see? And just to hear them make the case for decentralized science, because I do agree that the traditional method of raising funding is incredibly hard. You've got to jump through all these hoops, and that's not perfect either. So I'm open to hearing the other side, even if I'm a little bit skeptical as things stand. Ledge, I wonder, before we get to the main headlines, we've got a little bit of time here actually today, which is nice. Runelord had this question in the YouTube comments. Let's do some Q&A. Same way, we're just going to do one Q&A. This question is, Asta, Avantis, and Pump shilled crazy on the timeline. One of these are going to be printing machine for Q4. How to position here? So any thoughts on, I guess, what would you call these? Like Pump maybe aside, you've got two tokens that are newer, getting pumped, getting like aggressive attention. I guess the question is, to what extent are you positioning for newer things versus things that are like your core positions? And I mean, you mentioned 30%, I think, in 50% in stables not so long ago. How is that shifting? How are you thinking about Q4 at this stage in September?
Yeah, stable allocation was 50-ish% a couple weeks ago. It's down to under 40 now, somewhere 37, 38-ish. And I am hunting for cash to buy more things.
Yeah, Legendary's looking under the sofa for money. That's what he was telling me yesterday.
Yeah, it got to that point. Legendary was like, when does Plasma launch? When do I get my stable? I need that money. I'm not allocated enough. That's the greed level that I'm experiencing at the moment.
The Legendary Fear and Greed Index is pushing.
It's definitely above the coin market fear and greed index.
Okay.
Wait, going to Runelord's question. Pump is an easy one for me. Pump is a new category. It's not new, but it's a new token category in the sense of that it's not a competitor to Hyperliquid. It's not a competitor to an existing product. It stands on its own. Mm-hmm. And I liked it from the pre-sale on. And I'm obviously up on my pump bags, and I feel like very comfy still holding them. But I am aware of that the timeline sentiment has changed so quickly from everyone grave dancing on that token to everyone being like, oh, this is a generational opportunity. It's not the biggest opportunity in crypto. It's the biggest opportunity in our lifetime to buy that token. So that was a bit extreme. And I do think that there is a saturation point that it could reach pretty quickly. So it's a trade where, I'm saying today that I'm pretty comfortable in there, but I might change my mind on that pretty quickly at any time. It's not something I'm like, I'm going to hold this for 2 years and see if it's going to be the next Twitch. I might end up holding it for 2 years, but I also might end up selling it next week if it becomes too ridiculous on the timeline and we attract, I don't know, super big YouTubers and everyone's then thinking, oh, this is going to be the next YouTube and it insta sends to 15 bill, then I definitely will lock profits in if it gets too ridiculous.
Interesting. I just want to deal with pump because I agree with you. That's like a separate category. And then let's talk about these newer things and to what extent we want to participate in those. I'm kind of open. I'm quite persuaded by the idea just because something's consensus. And I think this happens for some reason when people invest in this industry. I think there's like too much sentiment investing where it's like, no one is talking about it, therefore is good, or everyone is talking about it now, therefore the trade's over. It's like, guys, everyone was been talking about hyperliquid since the start of the year. Like, I know a lot of people had to maybe weren't in, but like the hyperliquid community plus more people, including ourselves, have been talking about hyperliquid since the beginning, or since, I don't know, $20 or something like that. And I guess my broader point is just because something starts to feel more consensus because people are talking about it now, because people are talking about it as a great opportunity, doesn't mean that it's over. I say this as someone who just booked their profits on pump because I think it moved up so fast. So I'm actually currently out of the trade, although maybe I'd like to get back in because I still like it as a product, as a revenue generating product. I think they're buying back a hell of a lot of the tokens still. I think if Solana is strong, which is the point I was making the other day, and it is continuing to be strong, then pump will be strong. Pump will be stronger as if Solana is stronger. I don't think it necessarily goes incredibly weak if Solana drops because pump is its kind of independent business, which is going to keep making money. But I think so long as Solana is stronger, it stays even stronger. And so I guess my point is, it doesn't mean that the trade is over just because it's got consensus, is my thinking. What do you think about
that? I'll disagree.
Okay.
Not with the statement that the trade
It's
is.
funny. I'm making the point as if I am actually holding the token. I'm not, and now you're going to disagree with me, even though you have the position open.
Exactly. No, I won't disagree. I
Just send me
agree
your
on
tokens because I should have them then.
exactly. I agree on the part that you say, just because something is consensus doesn't mean that the trade is over. But I disagree on the part that I think sentiment trading or counter trading sentiment in crypto is one of the easiest things to do. And sorry, I think I need to sneeze.
Go. Do it. While Legendary sneezes, just looking at some comment. Oh, okay, you're back.
I'm back.
Fast.
That was very fast. Yeah. So I think that you might have been biased with your early hyperliquid back to think it has been consensus at the start of the year. But there's been a lot of FUD back then. There's been, oh, they only have 4 validators. This is not decentralized. Oh, the vault won't work out. Basically, one big player could crush them. And they had situations where they had to refund people because things went south. So they did have to prove themselves. I don't think it was that consensus outside of the like hyperliquid loving and airdrop benefiting bubble on CT. And it became consensus later on. And ETH was so hated when it was down. So many things where like sometimes I do think it's easy to like use sentiment to counter trade that and go into the like most hated trade, most hated rally, most hated pump. There's a reason why we have all those terms in the industry. And one of the things that I found interesting that changed is, and that to me has been also signaling that it's becoming more consensus, because Trafi also points out Lighter in the YouTube comments. I remember when I talked about Lighter first, that was, I don't know, half a year ago, so whatever. There was no interest in using that. Like people, there was a smaller Hyperliquid community than today, obviously, and they were like, nah, I'm using Hyperliquid. Why would I go for something else? They had a great airdrop. But now that this thing is becoming more consensus, everyone is looking for the next Hyperliquid. Where could I get a Hyperliquid like airdrop? And initially I said on the show that I probably don't think it's for my personal portfolio worth it to try to do that. But now that we have so many alternatives and that you have this beautiful opportunity to just do delta neutral farming with very large positions between to different perps or perp platforms without necessarily taking directional risk. I'm like, why not actually do it? Uh, but I'll need plasma to get me my stable coins back because I'm not gonna sell many positions because I think you need to do perps with significant volume. Like if you can't do 7-8 figures on volume on that, it's probably not really going to worth it because 7-8 figures of volume isn't a lot when you talk about leverage and when you talk about like doing volume and exiting trades. You could do so much more with a little position. And we had was it Farmer Rick's guide basically also said, like, with a 5-figure position you can do 8-figure volume in a very reasonable amount of time, and people are doing that. So volume then quickly goes into the billions. So I think if you want to play the game, then you actually need to invest time and capital to make significant volume there.
Okay. So that's some thoughts on pump, and as a little bonus, some thoughts on farming some perp exchanges. Second part of the question before we hit the headlines today, we'll talk about FOMC. We'll talk about some other changes at the SEC and some more in just a moment. Second part of the question, Ledge, is like chasing the new stuff. We had Asta run yesterday, Avantis ran a few days ago. To what extent are you still trying to just jump in these opportunities? What does it tell you about the market where these type of runners are coming back in a significant way? Thoughts?
Yes, I do try to get into these opportunities. Asta and Avantis, both trades I missed because my interest was again more focused on this pickup and increase in AI and things. But I do think that this is the time in the market to go for these opportunities. And I think that ecosystem of Base on the one hand, of BNB on the other hand, like we are talking about multi-billion-dollar tokens, ecosystems, multi-billion-dollar cabals, whatever you want to call them. ICO Beast had a beautiful post on that. And there's going to be lots of incentives to have runners there and to heaten up this competition again between Base, between BNB, and provide people who are opportunity seeking with very high potential plays there. And I find that just because of the sheer size of money that's behind, they're way more interesting, for example, than right now focusing on abstract. I think people farming abstract are doing well, and I think that will play out as well. But if I look at like the total market caps of tokens there, it's so much smaller than the things we're going to see on Base now and the things we're going to see on the BNB side of things. Again, I do still think that abstract is like, worth your time. And if you are committed there and have leveled up in XP, it's probably worth to defend that status. But if you haven't
But not if you're starting fresh, basically.
Exactly. If you're starting fresh, I wouldn't start now on abstract and try to like outrun everyone who's been farming XP for months. I'd rather focus on these big ecosystems where there's now billions of dollars trying to get things moving and trying to attract new users as a result of charts like Avantis and others.
Okay, good thoughts there. Maybe I'll share some thoughts as we hit the next headline and continue the kind of discussion on allocation and the general thoughts on the macro. One quick shout out to Dudify in our Telegram chat, sharing that apparently Justin Sun is forking Astadex. There is Sun Perp coming out, just like you've had Sun Coin, Sun various parts of the industry. Looks like if CZ is going to have his perp exchange hyperliquid competitor, it looks like it's going to be Sun Perp, I'm assuming, on Tron. Very few followers. That is not verified. I'm just giving it a shout out. If you are interested in checking it out, it's Sun Perp _Dex. As I said, not confirmed, but maybe something to keep an eye on if you wish to continue to speculate on this market. So, right, let's get to the main headlines. We've got 20 minutes, good amount of time to get into it today. We have the first headline, which is that the market has been going up after the FOMC. It's, there was the 25 25 basis points cut yesterday. Ledger, what do we need to know here in terms of the substance of the meeting? It was very heavily speculated on beforehand. In the end, markets have just kind of grinded up as a consequence. So what do we need to know? What was said? And then what are your deeper thoughts on how we move from here?
Absolutely. As you said, the outcome was the expected one. We did see the 25 pips rate cut coming. However, to add just a bit more color to that meeting, I feel like the Fed has been focusing on the job market a fair amount of time, talking about how basically unemployment is still looking good, but the downside risks on the job market are increasing. That this is something that they're looking at. Also keeping in mind that inflation is moderate, GDP growth has slowed down as well, which is mostly due to consumer spending, but not, for example, when you look at investments in intangibles, that's not something that has slowed down. So this was one interesting thing, that they spent a fair amount of time talking to the labor market, to the job market. The other interesting thing was that this early sense and feelings of a growing divide, which we have talked about over the last couple of months, seem to have increased. We have 9 officials at the Fed who see 2 more rate cuts coming in 2025. We have 6 officials who see there's no more rate cuts coming in 2025. We had Governor Mirren dissent in favor of a 50 bips rate cut yesterday. So there is a bit less consensus than we probably have been used from the Fed. In terms of what that meant for the markets and what it means for the markets, let's bring up the S&P 500 first. It was if you look at it, a bit of a dip around 2 p.m. to 30 p.m. where we basically waited for the announcement. It was a bit of a scare, but then we immediately resumed and
who bothers trading in in that specific way? I always see these things and it's did someone literally hear him say good morning and just press sell? And then everything just carried on 10 seconds later, basically. That's what that chart is telling me.
Yeah, it's oh shit, I don't like the way he said good morning. We went back above 6,600 points for the S&P 500. Taking a quick look at the pre-market, CNN has clearly pushed their fear and greed indicator into the greed side of things, and everything is up on the pre-market. Dow futures up 0.65%, S&P 500 up almost 1%, up 0.82%, and Nasdaq futures up more than 1%, 1.13 to be specific. And then, just because we had this dissent between how many more rate cuts we'll see this year, Fed has hinted at more, but again, that wasn't a consensus move where everyone agreed on. There's 2 polymarket bets that I want to pick out. Obviously, one being the Fed decision in October, where we see an 82% chance, being up 11% from yesterday, that there's going to be a 25 bips decrease, 6% that there's going to be a 50 bips decrease, so 88% thinking that this is coming in October. And then, that is off the back of $6.4 million in volume. And then there's this other bet, how many Fed rate cuts in 2025, which includes the one yesterday. And there we see 62% think that there's going to be a total of 3. That's up 19% from yesterday. And that would basically mean that there's 2 more to come. And this is currently what the majority of the Fed thinks. But again, it's not a 100% consensus opinion. 23% think it's going to be 2 in total. And only 4% think that this is the only one that we'll see this year, the one that happened yesterday, that is.
Okay, I want to give you just some initial reactions and thoughts, and then I'm curious for yours, because we need to start to consider what are the implications of all of this for the market. The thing that I'm thinking more than anything, and remember, I have been an investor since 2021. Before that, I do not have significant experience, came in, did NFTs, did really, really well, learned about crypto backwards, and just been figuring this stuff out since, and have subsequently done well in some other aspects of crypto. The thing that I'm feeling, which I'm not sure if this has been accurate historically, is that I feel like the society, the economic program that we seem to be on now is one that is so hyper sanitized and predictable in that the market seems to need to know everything in advance. This culture of forward guidance, someone can correct me if I'm wrong. And I know that we've got some smart, more like literate economists historically than me. But like, I don't know if there was ever this culture before of requiring such detailed forward guidance. This became like a policy that is relatively recent on a historical basis. And I feel like that's just really taking some of the volatility out of the market. So we're bringing a lot of these conversations. We're speculating so much in advance of what the amount of the cut that's going to be, but it feels like, take Jackson Hole out of it for a second, which was a genuine surprise of how maybe dovish Powell was then. In general, it feels like each of the FOMCs, they just really want to make sure the market knows what's going to happen. They don't want to spook anyone. They don't want to ruffle any feathers, because basically the economy can't take it. Something's good. My instinct is that they feel like something's going to break if we do something too drastic. They did try doing drastic stuff, right? When they were going through the tariffs, it looked like they were going to prioritize Main Street over Wall Street, and that lasted a grand total of, I don't know, 48 hours or something, as the bond market appeared to want to break. So my instinct is, as we move forward, maybe this is consensus, maybe it's not, I don't know. But we're going into a rate cutting cycle. They're going to keep telling you we're going to cut really slowly, and we're just going to keep feeling that, okay, we're just going to be gently cutting because they're scared of inflation. And even if they don't cut, the feeling is that they will. I don't even know if they won't cut anymore. It's just like gentle cuts, cautious, very, very, like, just incredible trepidation of doing anything too drastic. And we just kind of grind higher. And in a way, crypto becomes kind of correlated with the rest of the market in that sense. Sure, you've got some runners like Pump going from 4 bill to 8 bill, but you also had Tesla doing a 2x from its lows around the tariffs to now. So I'm just, this is part of a broader conversation. My point being that I don't know if you need to be as all in on crypto specifically to get the outsized returns, because it looks like some of these other stocks, Robinhood, Tesla, I'm sure there are others that you can pick out, are offering you as much reward. And so, like, this is the kind of thinking that I've been articulating the last few weeks as well. So curious for your thoughts here, Laj. Also want to bring gold into the conversation in a moment, but what do you think?
You said the first thing was that, you think everything is like so hyper sanitized and we need so much guidance with speculating on rate cuts, etc. It's going to be like a bit of macroeconomics one-on-one. If you look at economic indicators, you typically have like 3 types of indicators. You have lagging indicators that basically look back at what has happened in the past. You have coincident ones that give you like a real-time snapshot, stuff like GDP growth. And then you have forward-looking ones that try to basically predict future trends. And that's something like, I don't know how many new businesses are being started, because you start the business with the expectation of making profit in the future. Yield curves and share prices, and the whole stock market is forward-looking. And it's most often like forward-looking for the next 6, 9, some say 12 months. And because the stock market is like also massively driven by what the Fed does and what rate cuts do, you have exactly this speculation that will happen around that, because you buy a stock not because you're like, oh, I like the current value of the company and I think it's going to stay there forever. You buy it forward looking because you think that company is going to be more valuable in the future. And I feel like you start to notice this more in crypto, because we get more institutional money coming in and we are looking more, oh, what does the stock market do? What do we do? What do our institutional investors do? And then I also think that the fact that one of the breakout apps this cycle is actually Polymarket, and this is a crypto app, and you have hundreds of millions.
Talking about predictability, right? You've got the Fed being predictable, but now you've got an app that's predicting everything.
Exactly. And speculating on that, it might feel like, or it might get to the feeling that, this feels so hyper sanitized, how you call it. And then to the second part of your comment, where I fully agree with, there's so many opportunities outside of crypto. You know, we talked about this, the stock market. Brett shared his thoughts on why he likes Robinhood. There's so many other things that are going on that you don't necessarily have to be in crypto to generate an above average return. It's the place that we know we chose and we are in, and we now also dabble more in crypto adjacent stocks. But it really feels like an everything pump. And I said it with gold and the S&P 500 specifically, that last year, it was 2024, it was the first year where we've seen both the S&P 500 and the gold price being up so much on a yearly perspective. I can't remember if this was like 15 or 20, more than 15 or more than 20% for both gold price and S&P 500, but it did happen for the first time in that way. So we are in a market where I still think people are just trying to get out of the dollar and be invested in things, and these things are completely different asset categories that are being hunted and chased at the moment.
Yes. Okay. I think that's fair. That's interesting. I think, I mean, I bought some more gold yesterday. I sold a bunch of NFTs for a reasonable amount and just literally just shifted it into gold. But maybe unlike you, I've never had a huge gold position. And so that's something I'm thinking about increasing in general. But to be clear, there's a portion of my portfolio that's meant to just be stable. And so now that one of the interesting things I've been thinking about is you have your stablecoin position, the stable portion of your portfolio. Actually, in my mind, is kind of Bitcoin stables, or it was, because I knew I'm not going to sell Bitcoin. Bitcoin, to be fair, is like maybe too volatile still. Actually, I don't know if it is at the moment, but in general, let's say. So really, it's like stable coins and gold is how I kind of think about that now. And I kind of want to shift either some stables into gold or just, some NFTs that I don't, because I said the secondary market on NFTs is not how you make money on NFTs. You have to be in at the primary, I think, in order to capture the upside. So I think having a proportion of gold is something I've been, I keep talking about at the moment that I really like the idea of. Shout out to Niski in the Telegram saying that the Fed started using forward guidance as a tool in the early 2000s and a lot after 2008 where rates were zero. It helps them try to affect rates at a longer end of the curve, but also guides people as to how to invest and prepare. If the Fed tells you we are likely to reduce rates once or twice, you are more likely to be okay borrowing and capex spending on your business. So again, just like trying to help businesses, but I guess it means that a lot of this stuff is taking some of the volatility out of the market because they're trying to give you the confidence to keep doing what you're doing, or just to be able to predict stuff better. And as Legendary said, the interesting thing on top of that is the rise of polymarket, which seems to be incredibly accurate. I don't know how many times out of 10, maybe 8, 9 times out of 10 at the moment. So maybe even more. So something to think about there in general. But look, that was our kind of general conversation today on our thoughts on the market. Let's just a quick final one. I mean, I said a couple of weeks ago, I hedged a little bit yesterday with a short. I'm kind of happy to keep that open just as like an insurance. But in general, when prices were slightly lower, I was like, okay, this is, I think, times to buy the dip. I bought a bunch more Bitcoin at like 110, 113. Are you still in that same camp, or are you hesitant to buy majors at these prices?
I'm not buying.
You're just going further down the risk curve.
Yeah, I'm going further down the risk curve. I like my major allocation at the moment, and I'm going further down the risk curve. Now,
Okay.
once I realized profits from being further down the risk curve, some of these profits will go back into just buying Bitcoin. Not everything is going to go into stables. Gut feeling right now is like 50-50. 50 into stables, 50 into Bitcoin. But
I think for me now, it's going to go like 20, I don't know, I'm literally making this up. I'll decide when it happens, but like something like 20 Bitcoin, 20 gold, 60 stables or something. Maybe that's conservative. I'm hearing too many people calling it a super cycle, and I've heard that before in 2021. Like, look, maybe it is. I'm not adverse to holding stables basically when you can put it to work in this industry so well. I know that's maybe counter to other people. They think the appreciation on the asset itself can be greater. Sure. But that's why, in crypto, you just need to survive. And one of the core ways to survive is by having stables. And that's why we're doing well. If you go all in on the assets, like, I think it's harder to survive. So maybe a bit of an alternative perspective there. Right. Second headline there. We've only got 5 minutes left. We've got 2 headlines to do. I think that's going to be fine. Maybe we'll run a little bit over. But what do you think about this news about China banning companies from buying Nvidia chips? Like this obviously is not crypto core crypto, but very much related to the geopolitical points that we've been making and related to AI. So what do we need to know here, and what are your thoughts?
Absolutely, yeah. The war between US and China and AI hegemony is continuing and has reached this new stage. Was reported by Financial Times that China's internet regulators have banned the country's biggest technology companies from buying Nvidia's artificial intelligence chips. Before the ban, there was actually earlier guidance that focused on a particular chip that was widely used for AI. But now that the Chinese government has assessed that domestic chips had attained sufficient performance to compete with NVIDIA's chips, they outright banned that. Unsurprisingly, NVIDIA's stock price didn't like that. It did dump 3% on the news yesterday. CEO of NVIDIA had this to say: "We can only be in service of a market if the country wants us to be. I'm disappointed with what I see, but they have larger agendas to work out between China and the US, and I am understanding of that. We are patient about that." And I think it's interesting more from the perspective that there's also been bans under Biden for NVIDIA to export certain chips to China. So it's import bans, export bans, and it's, I think, just an extension of this fight for AI dominance and being a country that has the first shot of actually having an AGI running. And if you think about this realistically, and that seems to be the consensus in this industry, there's only 2 countries who have a realistic shot at winning this war. And it's obviously
Yes.
the US and China, because they can dedicate resources, almost infinite resources, to that. And I'll quote this paper again from that very young dev. I actually need to look up his name. I can't always call him the very young dev who left OpenAI, who said that every 6 months they just add another zero to how much is being spent to acquire chips to run AI models. And obviously, at some point, you will reach a status where this is so much money that the domestic supply is not sufficient, and you will have governments come in with import and export bans to try to keep as much of that like potential computing power within your own country.
Interesting. Yeah, I was thinking about this more from just the geopolitical standpoint. I think what you mentioned on the AI side is really important, and that battle that is going on. But I'm just thinking in terms of the increasingly more productive relationship between China, India, Russia, and how they seem to be getting along better. They seem to be diversifying away from the US, and how the US does not seem to want to have the same type of I mean, on the one hand, they don't seem to want to have the same combative influence around the world, and maybe there's no appetite from the US to deal with external conflicts, when in some ways the internal conflicts are on the rise. And yet there's still obviously very much involved elsewhere too. But I think it's telling that these countries are diversifying away from the dollar, and that's something just to keep in mind. I'm just intrigued how that's affecting even this business stuff on the AI side. Okay, getting into the final headline today. As we round out the show, this is the news that the SEC approves listing standards for ETFs, permitting a clear path for crypto ETFs to list and trade. This is the US Securities and Exchange Commission approving on an accelerated basis listing standards for crypto exchange traded funds, quickly setting the stage for those products to be ready for public trading. This is a significant turn of events for dozens of crypto ETFs awaiting the agency's sign-off, and would accelerate the process. Firms have been looking to list funds tracking Sol to XRP to Doge in the wake of a friendlier regulatory environment for the SEC. Ryan Watkins prominent investor quote tweeted our favorite Bloomberg. It's Bloomberg, right? Bloomberg ETF analyst Eric Balkunas, who said the SEC has approved the generic listing standards, so long as they're basically making these standards much faster and making it much easier. And Ryan had this to say to analyze it. Said, hard to overstate how big a deal this is for the crypto ETF landscape and how fast we're accelerating the distribution of crypto. So I guess the broad takeaway from this is that the distribution is about to improve significantly. There's going to be far fewer hurdles and hurdles to jump over and hoops to jump through is the right analogy I was looking for to get these ETFs ready and listed, which in theory should help distribution. If I had a slight counter take, it would be that I think that there will be loads and loads of ETFs, but that does not mean that there will be demand for the ETFs. Like, remember when the ETH ETF went live, it took ages for that one to manage to catch any fire or attention. So maybe there might be some speculative capital that goes in to some, maybe via DATs, which buy the ETF. But I'm not entirely bullish on the idea that there'll be so many ETFs, because I don't know that there'll be demand for it. I don't know if the industry is mature enough for the demand to go all the way down the risk curve into all the ETFs. Although, yes, the market is chasing the DATs down the risk curve at the moment. We've had, take Bitcoin, ETH, and Sol DATs out of it because they're like legit majors. We have seen a Doge DAT. You've seen other. You've got Hyperliquid one as well. You've got more coming. You've got XRP. You've got all these others. So we'll see. We'll see how that transpires. Just wanted to bring that to your attention. It is important on the distribution side. Any final reflections on that for you, Ledge, as we close out here?
Yeah, we actually have data on this impact. And it comes via the CIO of Bitwise, if I'm not mistaken. Yes, Bitwise, who said that the SEC passed the ETF rule in late 2019, which created generic listing standards for traditional ETFs. And on this chart, which I'm sharing on the screen, you can see that in the years prior to 2019, the average was 117 ETFs that were created per year. After this ETF rule passed, we did go up to 370 ETFs per year. So the idea is to expect a similar effect for crypto ETPs, ETFs as well. I think also maybe another relevant aspect to that is not only, yes, distribution, more ETFs, more money coming in, albeit with some skepticism, as you mentioned, that it just takes time for that to kick off and funds to come in, is that I think TradFi and regulators are starting to realize that there's like a massive speed gap between how fast things happen in Web3. When something comes out, becomes relevant, becomes consensus, and then becomes tradable. Like, look at stuff like Hyperliquid, where you then have like treasury companies buying Hyperliquid to give TradFi an opportunity to invest into that. And that there should actually be a faster way to get this exposure without being on chain. And I feel like that might be also a bit of a response to that on the one hand, but also an acknowledgement of the maturity of our industry to go for this rule.
Okay. I like the take. I like the show. I like the conversation. I like that we had so many people in the audience, in Twitter Spaces, on YouTube, and across all platforms. Thank you so much for joining us, guys. That is the close of the show for today. Thank you to my co-host Legendary for being in the co-host seat with me. Thank you to all of you for joining. We do this every single day, Monday to Friday, 7 a.m. Eastern time, live for 1 hour, live on X Spaces, X Video, YouTube, and you can catch us on Apple and Spotify podcasts as well. Just another shout out, getting some questions in the comments. If you want to join the Modern Market Telegram, which is fast becoming the best Telegram chat in the business, you can send the Modern Market Twitter account a message and we will share the link. We're not just going to put it in any public place at the moment. Send us a message and we will get you in. We hope you have a wonderful day. We will see you again tomorrow. Take care. Bye-bye.